Madam Minister, it's wonderful to be back in Jakarta and to meet with you on behalf of Fitch Ratings.
Welcome
Thank you
back,
for your
Steve.
time. Minister, I wanted to ask you, in October this year, Indonesia will play host to the IMF and World Bank annual meetings in Bali. The international spotlight will be on Indonesia and be an opportunity for you to showcase Indonesia's achievements over the past years. What specific achievements and what objectives do you have for these meetings?
Well, this is really an opportunity for us. First, of course, Indonesia feel honored to host this IMF annual meeting, IMF World Bank annual meeting. And this year is going to be the 20th year since the IMF came to Indonesia as an institution who addressed the issue of financial crisis. So for us, 20 years journey since the crisis, a lot of things can be presented to the world. That this country now is among the emerging country, among the 20th largest country in the world. We are in the G20. We are growing among the third highest in the world, among the G20 members. And we are also having a very ambitious reform addressing all the structural problem in Indonesia. Indonesia is a big country. We have 257 population. We are growing at 5.07 last year, and we are aiming for 5.4 this year. We have a very prudent macro policy, both on the fiscal side as well as on the monetary side, have a low stable inflation. Deficit of the fiscal is among the lowest, maybe among the G20 again. So we have a very good, what you call it, a storyline narrative in which the government working very hard to address the issue which is important for Indonesia today and in the future, whether you are talking about human capital, quality, infrastructure, reform in our institution. This is going to make Indonesia to become the more developed country and very resilient country, because we are diversing our economy away from depending on commodity, although commodity is still very important for Indonesia. But the commodity is actually now not only oil and gas, we have other mining, but also in this case we have palm oil product, as well as now on a construction trade, especially because of digital economy and e-commerce is actually growing very vibrant. And of course, manufacturing sector, which is, I think, is becoming so diverse. So this is creating more resilience. So in short, I think this is going to be a place and a time for us to showcase to the world that Indonesia learned from the crisis. We are becoming a better country, better governed, more transparent, accountable. We are fighting against corruption. We are creating more decentralized development across Indonesia because we are an archipelago country. And we are adopting a sound policy, both at the micro as well as macro, as well as the micro level. Very ambitious reform. Our ease of doing business is improved very significantly. We are among the top popular destination of investment. So this is all a very nice story, which is credible one.
So in a way, it's an opportunity for Indonesia to demonstrate to other emerging markets how sound policies translate into success and higher growth, and also to be candid where the challenges are and how to address them. In a moment, I'd like to delve a little bit deeper into some of the areas that you just highlighted. One of them was the external resilience. We recognize that at Fitch Ratings, and as you know, in December, we followed through on our positive outlook with an upgrade of the sovereign rating to BBB.
Thank you so much.
What was your reaction when you heard the news?
Well, of course, we are very happy and glad, but this is also what the Indonesia deserves, to be upgraded and have a positive outlook. Why? Because I think we're supporting with all the credible fundamental. So this is not you are upgrading us because you like us. It's not. But you really look at our policy. First, as I said earlier, on the fiscal side, the government in a downward trend of deficit reducing. So we are becoming more resilient on the fiscal side. the fiscal policy aiming for still pushing or supporting growth, but we are not substituting for especially all those investment policy, trade policy, and all structural policy that will create more better environment for the investment, for the consumption and export to grow. The other structural policy has been measured in a way so that we can really track the improvement. So when you are providing us with assessment, I think this is just to confirm what the government is doing and what we are doing in terms of strengthening our both domestic fundamental, external balance, as well as the production side and competitiveness. I'm not saying that Indonesia, everything is actually an easy story. Mm-hmm. As I said, this is a big country. Mm-hmm. When we are talking about infrastructure, how to build connectivity across islands of Indonesia, we have more than 16,000 islands. This is really a very big homework for us. So it's not going to finish only like in one term of the president, because Indonesia has been lag behind on the infrastructure since ASEAN financial crisis. Mm-hmm. And then if you talk about human capital in Indonesia, we are talking to 157 million people. Mostly is a young generation, which create us much more better position. Mm-hmm. But also create us a lot of pressure in terms of how we are going to invest in a human development. Yep. Education, health is two things, and as also including soft infrastructure, mm-hmm. that is social safety net.
Right.
All in the beginning of what we call it designing the sound policy. But this is really testing us to our limit in terms of how we are going to design a good education so that it will fit with the current and future trend of technology, the labor market, which is becoming so competitive, the trend of artificial intelligence, robotic, that is going to strengthen the role of the labor in industry. So all those things becoming all the issue that the government is now fully aware, and we are aiming to address this issue through our development program. Yeah. I think in a way the story of Indonesia is also representing the story of other emerging and developing country. Maybe the difference from country to country is the way that the leadership of President Jokowi and the cabinet in addressing this issue. We are very open and transparent. Many of our policy has been communicated and consulted. So all the, what you call it, best practice, if you can call it, best practice in terms of both policy making process as well as the policy design is actually can be found in here.
As impressive as the achievements are that you highlighted, and you have challenges to face, one relative disappointment over the past few years in Indonesia has been a growth rate that's been stuck around 5%. Not bad. Latin America would love to grow at those growth rates, but when you look over to your neighbors, Malaysia's 5.9, Philippines 6.8, India's above 7 this year. Why has Indonesia been lagging behind those countries and perhaps not filling its full potential?
Yeah. What is good about us is that we always, in the region in which the other neighboring country is always in a very good performance. So we never feel satisfied with the level that we are having. So it's a good setting, a good context. In terms of the growth itself, if you look at Indonesia in the past 10 years, we were actually have the ability to work, to have a growth above 6%. That was when the consumption can grow above 5%, usually about 5.5%. And investment is growing very fast. This is usually supported by both banking credit expansion as well as commodity boom at that time. So creating a windfall profit that is translated into property construction. And also in terms of our ability to actually improve the export. So again and again, it's three pillars of growth which is important: consumption, investment, and export. And this is exactly what we recognize today. If you look at the consumption in Indonesia, it's actually growing around 5. Not bad, but it's not good enough if you want to increase the growth to the level above 6, because consumption is still explaining 57% of our GDP. So meaning that the confidence of the consumption is important. I must say, and you recognize Indonesia, the struggle of Indonesia to create low inflation is actually has been long recognized. The fact that now in the past 3 years that we are actually stabilized at a low level of inflation, 3.5%, plus minus 1, this is an achievement in itself. There is an attention in terms of how we understand the movement of the commodity price in Indonesia. And this is big country, again and again, I will say that, meaning that in which connectivity and infrastructure is not always built smoothly. So sometimes price can be easily spike in one region and then contribute to the national inflation. We also have to be very careful in terms of creating job. It's a good quality of job so that there is a really purchasing power which is supporting of the Indonesian population. So that's on the consumption side. Investment, I think what we are lag behind is because the Indonesia, in this case, is too reliant on a banking financing. Our capital market has not been developed. So alternative financing is still not yet there. And then when the commodity drop in terms of price, that is in 2013, 14, 15, then you create a pressure, that create pressure in the banking sector. Non-performing loans slightly increase, so the bank is now holding back the credit growth. That create the investment growth in Indonesia, which is only below 5% or around 5%. That is super low in Indonesian standard. Because if you look at the Indonesian history, the investment usually can grow by 8 or even double digit, 11, 12%. Right. So this is the area which now the government is working. We are aiming for the stable financial institution, bank, non-bank financial institution, including a capital market. But at the same time, we want to make sure that the balance sheet of the corporation, as well as the ability to grow in terms of their expansion, is there. That's why we are focusing on improvement on the investment climate. We are pushing hard on the competitiveness and productivity.
Right. And one of the things we noticed when we reviewed and upgraded Indonesia just last December is you've unleashed 16 economic packages, and you see the results in the improvement in the World Bank's ease of doing business rankings. You rose from 109 2 years ago to 72. That's an increase of 37 places, and quite impressive when you
for
look
a big country like us, that's really very impressive.
Yeah. Yes. Now, the good news is you're moving up, but the bad news is there's still a lot of room to go. 72 out of 190 countries, so you still have room to go. Let me ask you, one of the bottlenecks, I guess, that's been around in Indonesia for a long time is the lack of infrastructure. Since my days here 10 years ago, I see a lot of improvement in the power and transport network. Here in Jakarta,
you are still frustrated with the stuck of the traffic in Jakarta.
Well, but you're building a subway system. Exactly. I heard there's now light rail service to and from the airport, so there's visible progress. We see that. But one of the constraints really is the low revenue ratio. I know this is a subject very near and dear to your heart and very much within your portfolio as finance minister. When we look at Indonesia's tax ratio, I think the government budget is around 12%, general government's around 14%. There are only 4 countries globally that we rate with a lower revenue ratio than that. What are you doing to boost revenue? You just put in a new Director General of Tax. What are you doing there? What is your medium-term strategy, and what are your specific revenue targets?
Yeah. Well, first, we actually looking at the government capacity, especially Director General of Taxation, in terms of their performance. So evaluate what is happening, especially during the good time of commodity boom, why we cannot capture and collect tax. And with also at the same time, we are inviting IMF World Bank to look at our situation, OECD even looking and examining what is actually the weaknesses. So we look at first policy level, the second one institutional level, and the third one is on the implementation, that is the capacity. And if you look at the policy, there are a couple of notes which can be improved. For example, we have a very complicated both registering, paying, and returning tax, if in this case. So VAT return has been complained. This is one of the bottleneck of the ease of doing business in Indonesia. So we are improving on all those, what we call it as a quick win, that we can actually improve in terms of our ability to serve. So I'm not only talking about collecting more revenue at all costs, because I think the most important for Indonesia is actually building the strong foundation both institutionally and at the policy level, so that we are going to be able to create more sustainable progress on the tax policy as well as tax collection. So on the policy, there are a lot of quick win in terms of this e-filing, e-registration, e-payment that can be creating much easier for everybody to comply. Indonesia has been moved from, used to be when my time as a finance minister 10 years ago, only 6 to 8 million taxpayer. Now we are dealing with more than 42 million. So that will require a totally different investment on an institution. The second one is we are also looking at the institutional level. And when we talk about institutional level, there are three things which is very important. Human resource, that is the capacity of the staff, integrity, professionalism. This is the area in which we really have to create a good governance, check and balances, standard operating procedure, business process. So the human capital and business process is the two elements which is important on an institution. But as much as you try to invest on that, we also have a problem on a database and in IT, because it was lagged behind. Since my time during the finance minister 10 years ago until now, we are not really upgrading. And that's make really a complication, because Indonesia, as I said, people can have the location of their production in Sumatra Island, but the headquarters is in Jakarta. They can actually have in many different provincial area, whether you talk mining, estate, agriculture, can be actually in many different places, but the headquarters can be in a different also places. And without good IT and database, I think Indonesia cannot really have what you call it the good compliance, both from the taxpayer, but also for us to be able to serve them better. And this is one of the area. And then at the end, also related to the implementation. The Indonesia have quite a lot of what you call it policy that is creating exemption of tax. This has been one of the most complicated. We have a lot of whether commodity, sectoral, which is exempted. And that create what you call it the administrative and collection cost, which is very high.
Right.
And the more complicated, then you are going to have the governance problem, you have an inefficiency, frustration from the taxpayer point of view, as well as inefficiency in collection. So a lot of what I call it a reform element of the tax that can and should be addressed. I, as a finance minister, not hesitate to learn, so that's why I'm inviting many experts in the world and telling me what I need to do in order to improve. But at the same time, I think we also have to make sure that the people in Indonesia understand that paying tax is part of their citizen duty without they feel that they are going to be like threatened.
Right.
So this is really a balancing act, if I can call it. On the one hand, we try to improve growth. People doesn't feel that they are afraid to consume, to invest, because somebody is like looking behind them to tax them. So this is something that we really try to make what light out in terms of the taxpayer point of view, but at the same time, very ambitious reform internally.
Now, have you set, in terms of the medium-term revenue strategy in the next few years, have you set specific revenue targets that you'd like to hit?
Well, as you mentioned, that if you look at the region as well as the country as and our group, emerging country, I think the increase of the revenue ratio of the tax collection to the GDP should come up to the even 20%. That is in the more like medium long term. Currently, if you look at the definition of Indonesia, we are at 11.4. This is a wider context of definition of revenue. So every year we are aiming of the increasing those ratio by 1 to 2% of GDP.
Okay.
This is something that we are going to, a combination between short-term quick win as well as the medium long-term structural and improvement that we are going to do. So in this case, we are by the end of 2019-20, we are talking about 13% of GDP and then moving up into 15% of GDP.
And how do you feel about the tax amnesty and the results? I think undeclared assets worth 40% of GDP were found. Are you able to make use of that to achieve these objectives?
Yeah, first, of course, that's improve our database. So the declaration, both domestic as well as foreign, is giving us the idea that so much of those data has not been collected and not declared. And the second one, we will look at those. The one which is repatriated, they have to stay in Indonesia for 3 years. So we have to make sure that this 147 trillion is going to be able to create more productive activity in Indonesia. But most importantly is, of course, for us to understand that Indonesian people in general, it's not yet complied. They don't see that paying tax is something that
so it's about compliance and the culture and service.
Our compliance rate is only around 65, 64.
So the good news is there's a lot of scope to raise revenue. Okay. Now, once you get those revenues in, you can channel them to some of the development objectives, social and infrastructure spending. On the topic of infrastructure, where do you see the key priorities? And one of the issues that comes up from time to time, given the budget is so constrained on revenues, Indonesia has to rely on the state-owned enterprises to finance a lot of the infrastructure. So they're building up debt in the SOE sector, which could pose contingent liabilities to the government. So where are the priorities, and are you worried about the buildup of contingent liabilities?
The need of the infrastructure is obvious. I mean, in Indonesia and any ASEAN country, that's why one estimate is actually 1.7 trillion annually for the ASEAN. And Indonesia is already putting around 5,000 trillion that needed for 5 years period. And that cannot be financed through the government alone, especially through direct budget spending. So we also have a fiscal rule that is limiting us on the deficit up to 3% of GDP and maximum debt to GDP of 60%. And we really discipline ourselves in complying to that. So the solution, definitely, you have to mobilize others to build the infrastructure gap. State-owned enterprise is one solution. We injected capital so that we actually can use better leverage. So state-owned enterprise have a balance sheet. You mentioned about contingent liability. We actually among the country who's been very transparent about contingent liability. We reported, I think back in 10 years ago, we started with this tradition of reporting and calculating contingent liability. We even have a cap of 3% of GDP in terms of the maximum contingent liability. And we always state it in our financial statement. So that is something that we will continue monitor. But I think the government really emphasizing more on the private sector. And today's situation, there are a lot of what you call it legacy issue. Private sector engagement in the infrastructure development in Indonesia is not new. But in the past, the history is not always good. So that's why we really need to reset this kind of relationship. First, in terms of better procurement, better financing standard, so that we are going to be able to create a very accountable, clear, transparent environment for the private sector to invest in the infrastructure, because we are going to deal with them in a long-term contract, 30 years.
So what does this entail, like PPPs?
With the PPP, it's not only talking about PPP. Ministry of Finance has already issued a lot of instruments. Even institution has been created in order to bridge this gap. Familiarity, because I must say, and I have to admit, many of the Ministry of Finance officials, they are very expert in managing budget, including spending, but not necessarily an expert in inviting and designing the PPP structure of financing. So I have to create an institution dedicated to address this issue of the PPP as an arm length of the Ministry of Finance, but they are all mostly is from private sector or corporation, so that they understand how to deal with the private
And
sector.
does it entail government guarantees?
We have a lot of instrument actually. Government guarantee is one thing, and this is also quite a lot of definition of guarantee. There is an availability of payment, viability gap. We are creating what you call it. Many has been recognized in the world that the preparation of project is also one of the bottleneck. So project preparation fund is also been created. We also creating quite a lot of what you call securitizing those brownfields, so the project which is already being operated to become and generating revenue. I think a lot of innovation has been done by us in order for us to be able to invite private sector. And now I also see quite a lot of interest in Indonesia in terms of how private sector, not only domestically but globally. Many of our bondholder, government bondholder, is actually now when I do the roadshow, they are actually expressing their interest to buy beyond government bonds. They want to invest directly to the infrastructure.
What about Komodo bonds? Some of the state-owned enterprises have been relying on financing. Do you plan to continue using Komodo bonds?
I think we are going to diversify quite a lot of what you call it source of financing, especially addressing and also at the same time accommodating the appetite of private sector, especially globally, because of course we need capital to come and flow into Indonesia. They can be in the hard currency, but also in the local currency, rupiah currency, but they are buying from the offshore. This is also one of the area that we are going to improve more, including securitizing, as I said earlier, on an infrastructure project. So we are doing quite a lot of innovative both instrument and mechanism, so that what you call it, we can accommodate a different appetite and interest of investor in investing in Indonesia, especially in infrastructure.
Right.
They can be in equity financing, they can be in debt financing, they want to buy securitized instrument, they want to be partner from the very beginning. It's really depend on what is their appetite and familiarity of Indonesia. But the point is that Indonesia is a big country. We have a many diverse infrastructure project to offer, and we are ready and have the ability to offer them in such a very different.
Now, your medium-term budget targets, you mentioned you're planning to stick to the 3% deficit target, the 60% debt to GDP anchor. Now, here's where the mix of politics comes in, if I could ask you. In the middle of 2018, you have regional elections. Next year is the presidential election. Is there a risk in the political debate that the deficit ceiling could come under pressure? How do you stay focused on these medium-term fiscal targets in the midst of the political campaigning and the noise?
First, I think Indonesia is not new at all to have this both regional local election as well as the national election. There is a cycle since 2000. So we have 2004, 2009, and then 2014. These are all the cycle which Indonesia has been actually familiar with. And I don't really see that the debate regarding using a fiscal as an issue is actually big in Indonesia, meaning that there is like a populist pressure to spend. You actually have to be very surprised, Steve, in here. In Indonesia now, one of the political issues has been politicized quite excessively. It's about debt.
Yep.
And meaning that the population has been actually informed in a wrong way, as if the Indonesia have an excessive debt. So the appetite to have a growing debt is actually much less in Indonesia,
right?
Because the population feel that they don't like debt.
Right. In fact, the public debt is very low by peer comparisons.
By peer comparison,
you're down at 28% compared to the BBB median of 41%. So that message needs to get out.
But the Indonesian population and politicians use the debt as if that Indonesia has already become a reckless country.
It becomes politicized. So how do you
I'm
counter
bringing
those
that
pressures?
back to your initial question. Indonesia is different from any other country in which you are actually struggle to convince people to say that actually deficit of the budget of below 3% is actually okay, as long as you're investing and have an accountability and good governance in order to make sure that the debt is going to be invested in a good way. In terms of the commitment of the reform, the president is even now focusing on the reform even deeper in this case, that he's aiming for launching the single submission for the investment next April. We are going to provide more incentive for the investment. As you mentioned earlier, the ease of doing business, although we jumped from more than 100 into 72, the president is not satisfied with those levels, so he's aiming for 40. So we are actually really working very hard in really addressing the issue. And nothing is impossible in here.
Okay.
So it's a good teamwork under the leadership of President Jokowi.
Okay, one other area that we'd like to ask you about is you're going to be attending the G20 meetings coming up, the spring meetings of the IMF World Bank. I'm sure one of the topics on the agenda is the impact of rising global interest rates and the pressures that this could put on emerging markets. You know, if we're in an environment of higher interest rates, we at Fitch expect 4 Fed hikes this year, another 3 next year.
Yeah.
The dollar has been weak, which has helped emerging markets with their debt burden. But if we're in an environment of rising interest rates, if the dollar begins to appreciate again, does it worry you? Is it something that keeps you up at night, how Indonesia and other emerging markets can cope with these external pressures?
As an emerging country, open economy, we have to constantly vigilant, of course, because we all know that as much as you try to build your foundation, there is always a regional and a global shock or influence that can affect your economy. So I think Indonesia will continue to be vigilant with this development. We learned from our own, in this case, what was the vulnerability or perception of vulnerability on the Indonesian economy and how we are going to address it. So in this case, a rising interest rate because of hopefully a better sign that the economy in the United States is going to be stronger and growing and is not going to be disrupted by their fiscal policy, trade policy that is going to weaken their own growth prospect. If the growth in the US is good and hopefully it's not combined with the protectionism, then this is also good for the world.
Right, so if it's accompanied by
so that is accompanied by the
strong,
continued strong trade as well as investment. And for Indonesia, we always try to make sure that our foundation, both in terms of the investment, sectoral policy, as well as at the macro policy, is going to be sound. I think we learned quite a lot. So when you mention about worry, it's not really worry. It's more vigilant, I think the correct word.
Okay,
we
Minister,
are going to be very vigilant.
On behalf of Fitch Ratings, I'd like to thank you once again for taking time. It's been a very interesting discussion, and we look forward to meeting again soon.
Thank you so much.